All right, so when something feels off with your health, the first step that you might be taking there is something like an X-ray to maybe figure out what's going on the inside. Today, we're going to be doing the same thing with your finances, giving you a sort of financial X-ray so you can uncover some investment problems that you may not even know that you have. Here to walk us through that, money and business expert Derek Kinney, back with us again this week. Derek, good to see you as always.
Thank you, Jason. Good to be with you.
All right, so let's get this X-ray underway here. When you look at this, so-called financial X-ray, what do you think is usually the most common investment problem that sort of hides under the surface that people may not even realize they have?
This will be very surprising when you think about putting up the X-rays on each individual investment and kind of examining where the problems may be. Oftentimes people believe that if they have, say, 3 different mutual funds in their 401k, they're completely diversified. What happens though is when you lay those sort of X-rays on top of each other, you realize something shocking. There's about 50% overlap of all the funds you've got, and actually you're taking more risk than you thought. And so the biggest problem on this financial X-ray people should look at is, are they taking too much risk and they don't even know it? So talk to your financial advisor, ask them, how much risk am I really taking and how much overlap is there in all of these investments? You might be very, very surprised.
Yeah, sometimes you don't realize how much risk you're taking until a really bad couple of days and you're amazed at how much things have fallen. So yeah, let's look at that X-ray before we feel that break. All right, so investing, we know that can feel complicated for a lot of people, probably not for you though, Derek. What would you say is the easiest way for somebody to sort of simplify their investment strategy so it doesn't feel so overwhelming?
Well, so many people feel like there is this vault with all the money secrets and only a few people have the combination to it. I want to bust that vault open for all of our viewers and say, look, money can be made and you can make it very easily by buying simple indexes. And here's what they're called: exchange traded funds. They're commonly called ETFs. These are miniature indexes that allow you with as little as $50 to buy all 500 stocks in the S&P 500. Or all 2,000 stocks in the Russell 2000. The bottom line is it lets investors basically get money management tips for easy dollars. So ETFs, exchange traded funds, are another great way to correct the X-ray and talk to your advisor about how to make more money.
Okay, good advice there. When someone who's nervous about investing, really starts looking into this and they're just trying to get started, what would you say is the very first step they should be taking so that they can kind of start to feel confident in what they're doing, Derek?
Number one is don't wait until the end of the month to invest. We often find there's more month left than there is money, and that is a big problem for people. So if you don't treat your money like a bill, the first of the month, ideally, Jason, have it drafted from your checking account so you don't have to physically decide or make the decision, party with my friends, invest for my future. Most people choose the first option. So have it set and forget, automatically do it, but have it go to that S&P 500 fund or something easy. That way, when there's the month left over, you want to make sure you have paid yourself first and you are always the CEO of your financial future.
More month than money. I've been there, done that. Don't want to go back.
We all have.
Derek, final thing for you here. What would you say is the biggest mistake? I always love to know the biggest mistakes that you see people making with their investments, and better yet, how do they avoid that?
So many times we hear our friends and our neighbors talk about this hot stock tip or the big investment they made a whole lot of money on, and we feel FOMO, fear of missing out, and we then jump in. The problem, Jason, is by the time the tip got to us, that hot stock tip has cooled down dramatically. So the bottom line is only invest in what you can lay your head on the pillow at night and feel comfortable and peaceful and know that you're not taking more risk than you're comfortable with. But only go with your plan, not someone else's plan. That's the best way to save yourself a lot of heartache and make more money.
All right, a good talk today on an important topic. Derek, thanks as always for being with us this week.
My pleasure. Thank you, Jason.